So again, my name is Sid Haas with LKCS. I'm the Vice President of Business Development, and I work with banks and credit unions all around the country, helping them improve their marketing efforts. And obviously now, many of our financial institution clients are looking for loans, and they're trying to find new ways to attract loans. So today's webinar, we're going to be focusing on credit alerting and prospecting, and we're going to be talking about how to use data from the credit bureaus to improve those loan efforts. And please feel free to ask any questions that you have during today's webinar. The phone lines are muted, but you can type questions into the GoToWebinar toolbar that's on your screen, and I'll be happy to answer questions as they come in all throughout the presentation. So like I said, we're going to be talking about using credit data to improve both member acquisition and member retention, and also to obviously increase the lifetime value of all of your members. For those of you that are not familiar, LKCS offers a wide range of services for financial institutions, and it's all geared around improving marketing and communication results. We focus on a lot of different areas, from web development to statement processing to direct mail marketing and things like that. And a lot of what we're going to be talking about today actually crosses many of these different areas. But this gives you an overview, or at least a very fast overview, of our array of services. And I think you'll find as we go along today that credit prospecting and credit alerting fit very well in a number of these areas. When we're talking about using credit bureau data, we are talking, about actually purchasing data from the credit bureaus. And one of LKCS's unique advantages is that we do work with all three of the credit bureaus, and we enable you to purchase data from all three bureaus at the same time. So there's not three separate charges or anything like that, but we can aggregate the data from all three of the credit bureaus together. And that's important because not all bureaus have information on everyone. Obviously, the bureaus share a lot of information, but it can sometimes take time for that information to populate into all three of the bureaus' databases. And as you'll see as we go along today, a lot of what we're talking about doing in almost real time. So it's important to get that data, the latest data from all three of the bureaus, when you're trying to act that quickly. And you'll also see, and we'll talk about it a little bit more as we go, is that when we look at identifying loan leads from the credit bureaus, we can see up to a 70% increase in the number of solid leads when you actually get the data from three credit bureaus as opposed to one. And like I mentioned, there's not an additional cost to obtain that data from multiple bureaus. Obviously some of you are probably purchasing data from one or more of the bureaus directly. And we can save you quite a bit of money by purchasing the data through LKCS, and we can also provide access to the tri-bureau solution. We also offer a lot more than just the credit bureau data. So we compile the credit bureau data and combine it with a lot of other data warehouses and a lot of other data sets. So we combine things and add things like demographic information, homeowner information from the county deeds offices. We have very sophisticated AVMs to actually add things like home values and a bunch of different things. And all of this gets combined together. So as you can see in the center, we're actually tracking up to 1,100 data points for 215 million individuals. And we can help you actually use all of that data to identify very specific targets and then communicate with them with the appropriate loan offers. Now, when we talk about credit data, we're going to be talking about two things today. We're going to be talking about credit prospecting, and we're going to be talking about credit alerting. And there's a big difference between the two, and the primary difference is that credit prospecting, we're actually using the data proactively. We are, using these different fields of data, these different data points, to determine who may be, good prospects for specific loan accounts. And we're going to look at, obviously, their credit traits, things like credit scores and credit history, and establish relationships, the number of loans they have, auto loans, mortgages, credit cards, outstanding balances, all sorts of things like that, and those demographic traits. And we're going to use that to extend credit offers to these people that may be in the market for loans. And we can do this to your existing members, so we can actually, and we'll talk about this in more detail, or we can do it for potential members. And we're also going to be talking about credit alerting, and that's significantly different than credit prospecting, because in this case we're actually using credit data reactively, because we're identifying your members or your prospective members that are already actively seeking a loan someplace else. And we'll talk about that in a lot more detail. And there's obviously opportunity for you to do both proactive credit prospecting and reactive credit alerting. And it's actually very important probably to consider a strategy using both, and you'll understand, I think, more as we go along. Whenever we use credit data, whenever we purchase credit data, you do have to be aware, that there are some requirements in there. And the primary requirement to be compliant with the Fair Credit Reporting Act is that you are actually extending firm offers of credit. And we'll talk about this quite a bit as we go through, but you are going to, tell members or non-members that they qualify for your loan products. And you're going to do that, make sure they qualify by specifying your lending criteria. So we're going to only market or to only provide the data for members and prospective members that meet your specific credit criteria. So again, you'll be able to specify for each loan offer, for each loan product, what your minimum and or maximum FICO scores would be, if it's a home loan, what the LTV is, based on their credit history, payment history, auto repossessions, bankruptcies, all sorts of things like that. And we can use all of the data that's available from the credit bureaus to make sure that these people meet, your specific lending guidelines. And we can help with those guidelines and give you ideas. But when we talk about using a firm offer of credit or sending a firm offer of credit, there is specific language that's involved. And, either your mail piece if you're sending out a direct mail, or your phone script if you're making outbound phone calls, or your email text, if you're sending out emails with these offers, has to use words such as, the recipient is pre-selected or pre-screened or pre-approved, for a specific loan product, for a specific amount, or at least a minimum amount, a specific rate, if we're quoting rates on the pieces, things like that. Now again, all of these mail pieces will include the different terms and conditions, for the offer, and they can include exactly why credit may not be extended. So you'll see disclosures, and we can certainly provide, sample disclosures to you that say things such as, we'll extend credit as long as you, have the income to support repayment, provide the appropriate collateral, et cetera, et cetera. So, in most cases, the credit data is obviously extremely accurate. But, in some instances, a member or a non-member may have just gotten another loan somewhere else, or an employment status may have changed, that the Bureau wasn't aware of, or something like that. And that would all of a sudden make the recipient of your mail piece no longer qualify for your offer. Well, in no means are you required to distribute funds to somebody who doesn't meet your lending guidelines, even if you send out a piece that says they're pre-approved or pre-selected or pre-screened. And again, I can provide all sorts of information, about that, including all the documentation and things that you need, from the different bureaus involved. So with I guess the ground rules set as far as what we need to do to access the credit data and what kinds of data is available, let's talk about how we can use this data to prospect for new members, and obviously to prospect for new members that need loans. So when we talk about credit prospecting, this data is available for any type of marketing campaign. So, if you're looking for auto loans, mortgages, home equity loans or lines of credit, if you're looking to refinance existing auto and mortgage loans, and obviously even credit cards, you can use this credit data to go after those types of products. And again, we'll talk about this, and I'll mention this several times, but we will pre-screen either your existing members, or we can reach out to the people, to prospects in your field of membership that qualify for your loan products. And that's all identifiable in our database. And what you're going to do with a prospecting campaign is you're going to extend pre-approved offers of credit to these members or non-members based on their actual credit score and other credit data. So again, you will specify, and we'll work with you to specify those criteria to make sure that anybody that's receiving your direct mail piece or your email or your statement-based campaign, so for those of you who are statement clients of ours, we can include a personalized cover letter or a statement insert, a graphical ad, right on the statements that extend these types of offers. And you can also make outbound phone calls to members and even non-members. But all of that is going to only be sent to the members or non-members who meet your specific credit criteria. And for those of you that use DataFlex, which is our database marketing system similar to an MCIF system, you can use DataFlex to measure the results of all of these campaigns. And if you have a separate MCIF, I'm sure you can do the same. We will always be able to provide lists to you. Even if we send out the direct mail piece or the email or the statement campaign on your behalf, you can always receive the lists of exactly who these offers were sent to, so you can track them internally as well. When we talk about, and I'm actually going to share some potential credit prospecting campaigns and show you exactly how you can leverage credit data to generate loans. But I want you to, be aware that these are just a few examples. I mean, I'm only going to show you 3 or 4 example campaigns. So, just with, any marketing effort, you just need to be creative and brainstorm campaigns, that make sense in today's market for products that you have an advantage of in your area, things like that. So again, these are samples, so if the credit parameters aren't exactly right for your credit guidelines, we can adjust the credit parameters for you, and we can provide numerous ideas. So if you were ever to call or email me and say, Sid, we're thinking about doing a pre-screen marketing campaign to go after home equity loans, and we want to reach a specific market, I can help you identify those credit parameters and develop the pieces and things like that. But we're going to first talk about a couple of different auto refi campaigns. So, we're all seeing that hopefully we're seeing that the auto market is picking up, that some auto lending activity is increasing, but there's still obviously an opportunity to refi existing auto loans. And you'll find that a lot of these potential campaigns that we're going to talk about can run in conjunction with each other, including these two. So, I'm a big fan of marketing automation, and we'll talk about this more, but these are the types of campaigns that we can run, on a quarterly basis and always look at new individuals, that qualify for these offers. So the first offer or the first campaign that I would look at are your lease expirations, people that have 1 to 3 months left on an auto lease. We know that when that lease comes due, these members or non-members are going to be in the market to do something for an automobile. They're either going to get another lease, turn that vehicle in and lease again, or they're going to finance the purchase amount of the current vehicle that they're leasing, or they're going to purchase something new. So obviously, this gives us an opportunity to go out and identify these members or non-members that have 1 to 3 months left on their lease, that also have a FICO score, in this case, of over 640. And obviously, anybody who had any late payments, or repossessions, we're not going to market this auto loan to. But again, this is identifying a very specific market of people that are probably going to be actively looking for some type of auto financing, in the next 1 to 3 months. We can also look at the people that may be trading in their vehicle, in the near future, and would be purchasing a new one, or have a couple years, 2 to 3 years left on their loan. Rates have gone down, so it may be an opportunity for us to refi that auto loan and bring it to our institution. And again, we can identify those people that have a certain term left on their loan or a certain balance, left on their loan, and qualify those members or non-members based on their credit score and credit history, and send the appropriate offer. Obviously, these are similar universes of people, but the language in that loan offer could be significantly different based on who we're trying to approach. We can do the same thing with mortgage refis. Obviously now a lot of news has been made about the HARP programs, and we can help, obviously help you capture quite a bit of loan refinance business, taking advantage of those HARP refis. We actually identify lenders. We score lenders on on which mortgages are likely or very likely to be Fannie Mae or Freddie Mac mortgages. And then obviously we can look for things like a mortgage balance of over $100,000. There's no FHA, VA, or reverse mortgages. We can look for the loans that are between 13 and 72 months. All of the things, that would qualify these mortgages for the HARP program, and then add on the credit parameters for each, individual, so that we're reaching out with, with a mortgage refi offer that will meet, the HARP program requirements and also meet your credit requirements to get these, get these people a good offer to refinance. We can also, identify FHA streamlines. Everybody likes to reduce paperwork. So we can do the same thing, looking specifically at FHA mortgage loans, with balances over $100,000. And again, removing anybody that has late payments in the last 12 months, and only looking at people, with the appropriate FICO scores and things like that, meeting your parameters. We can look at FHA prospects. So these are people that could qualify for an FHA loan but don't currently have an FHA loan. And again, we can look at mortgage balances between $100,000 and whatever the county limit is, in your area. And we have all that information, as well, or can certainly look it up for you. So if you're looking to do any FHA loans, we can do that. And certainly there's still an opportunity to refinance conventional mortgages. And to give you another idea, one of our customers just recently looked at refinancing mortgages with home equity loans in the first position, so that there were no closing costs involved. Obviously, a home equity is easier was easier for them to initiate than a mortgage with lower costs, so they were able to pass that cost savings on. And they looked at people specifically with low mortgage balances, so that they could use the equity to cover whatever available balance was left on the mortgage. So it was an interesting approach. But again, that's just an example of how you can be creative with some of these campaigns to attract different types of loans. So I'm going to show you actually what 3 campaigns can look like. So those were just some ideas of what campaigns you could run, but I'm going to show you what these could look like in both an email form and a direct mail form and things like that. So the first offer I'm going to show you is actually a first-time home buyer's offer. So this is the type of offer that you would send to people who are currently renting, but yet would qualify for a mortgage, based on their income and their FICO scores and the other credit parameters. We're also going to talk about a revolving debt reduction offer, so people that have revolving debt or credit card debt over whatever amount you specify, say over $10,000 or higher, that also have available equity in their home. So this would only be sent to homeowners with a certain amount of equity. And we would again qualify those homeowners based on your credit parameters. And the third one would be a general home equity offer, and these are sent to homeowners that don't currently have one of your home equity loans or lines of credit, that also have available equity, but maybe they don't have quite as high a revolving debt as the people that received the prior offer. Again, these types of offers can be sent at the same time, and these types of campaigns can run, simultaneously, because we're hitting 3 different groups of of members or non-members. And one of the unique things, by the way, that LKCS does, whenever we run multiple campaigns at a time for our customers, we automatically suppress people, either members or non-members, from receiving your credit offers, from receiving multiple credit offers from you within a 30, 60, or 90-day period. So that's up to you to specify. But if we extend a loan offer to somebody, we're not going to extend another offer to them for any of your loan products for that 30, 60, or 90-day period. And it can be whatever time period you specify. Most of our customers, will typically say 60 days, that they're only going to receive a maximum of one offer every 60 days from you. So even if people were to qualify for both a home loan offer and an auto loan offer and a credit card offer, they would actually only get one of those offers. And we can talk about more, that more as we, if you need to. But to give you an idea what these can look like, this would be a postcard mailing, a direct mail postcard that could be sent for that first-time home buyer's offer. So obviously you can see on the front, thinking about buying your first home, and on the back, you are pre-qualified for up to $175,000 on a 30-year first-time home buyer's mortgage. It shows them where to go for more information, how to apply, and then you'll obviously see the required disclosure that has to appear on the mail piece. This is exactly what a direct mail letter could look like. For those of you that are LKCS statement mailing clients, we can actually print these as the first page of your statement. So this can be a cover letter, a selective cover letter to certain members that qualify for your offer. But the piece on the left is actually an example of that revolving debt reduction offer. So it talks about how the current economy may be straining your budget. We make it easier for you to pay off your credit card bills, and you've been pre-qualified for up to $35,000. And the piece on the right is that general home equity offer, and it just jumps right into the fact that, they can select from a 5 to a 20-year term with no prepayment penalty, and they're pre-qualified up to $50,000. So, you can see how these offers, again, could be highly relevant to the recipient, and obviously be specific to their current financial situation, at all times. And you can send these out by email. So the same pieces can also be set up as emails, and you can send out a piece as an email and as a direct mail if you wanted to. So obviously the more ways you can reach members or non-members, the better. Email is typically something that you'd only be able to use for members because you wouldn't have non-members' email addresses. But again, the piece on the left would be an example of the first-time home buyer's offer, and the piece on the right is the general home equity offer. But the same content can be used across media, and we can also help write the phone scripts for your call center or for your loan officers to make outbound phone calls to promote these loans. So now that we've talked about credit prospecting, we're actually going to jump over to credit alerting, and we're going to talk about specifically member retention and cross-sell of loans for existing members. So, many of our customers, including some of you on the webinar today, already do, have traditional onboarding programs and matrix mailing programs and things like that. And, these traditional loyalty programs certainly work well, as you know, but they are not based on actual credit data. So, we're guessing. We're making educated guesses on who could be in the market for a loan. And we're doing things like looking at credit models and behavioral models, things like the economic stability indicator. There's another one called the risk insight score. Those are our credit models, not actual credit scores, but it gives us an idea of a member's or non-member's credit score. We're using things like the vehicle intent to purchase model, which kind of tells us who's in the market or could potentially be in the market for an automobile. And we look at real property data, which is, again, data from the county deeds to determine available equity and things like that. But we can use this non-credit-based data to guesstimate who might be in the market for a loan. But with those models and with our guessing, we cannot accurately predict the exact timing that somebody will be in the market for a specific product. But when we use data from the credit bureaus with credit-based loyalty programs, we can react with exactly the right offer at the right time, and we can gain the ability to reach your members who may be defecting to your competition in near real time. And I'll explain this in quite a bit more detail. But we receive data from the credit bureaus every day. So when we receive that data every day, we can actually identify which of your members have had a hard credit inquiry from any lender in the past day. And we can use that to trigger a lead and send an offer of credit immediately upon receiving that file from the bureaus each day. Again, this is based on actual credit bureau data, and it works just as you would imagine. So one of your members applies for a loan. They apply for credit anywhere. They can apply for credit at another credit union, at a bank, at an auto dealership, at with a mortgage lender, or even respond to a credit card offer. But as soon as a hard inquiry is posted to his or her credit file, those inquiries are categorized according to the type of financial product that person is seeking, and they're categorized by each of the bureaus, and they're categorized as either a mortgage loan or an auto loan or an installment loan, a credit card, or even some types of insurance products. We receive those feeds daily and weekly from the credit bureaus, and we can cross-reference your member list. All we need are members' names and addresses, and we can actually cross-reference each of your members with those daily feeds from the credit bureaus and identify leads. We can identify, anytime one of your members matches, a record in that credit file, we know that that member has applied for a loan somewhere, and we can obviously respond with a firm offer of credit immediately after receiving the lead. You have the ability to select which categories of inquiries you want to target. So maybe you want auto loans and mortgages. You're not, so interested in credit cards. Maybe you're not so interested in auto loans and you want mortgages and credit cards. Whatever it might be, you can select which categories of inquiries you want to target. We then pre-screen those leads. So just because a member has applied for credit somewhere doesn't mean that they're going to qualify for that credit that they applied for, or if they applied for a similar credit at your institution, if they would qualify for it. So we're going to take your loan criteria for each of those categories, and we're going to pre-screen members based on that criteria. Pre-screen those leads based on that criteria. So again, we can, say that yesterday you had 20 members apply for auto loans, over the weekend or something like that. And we can take that and then say of those 20, 15, meet your credit score over 660 or 680. They have the appropriate, debt to income ratios and all the different criteria that you specify, so that they would, likely be approved for one of your loans. We receive daily alerts from Equifax and TransUnion. They provide us their data every day, and we receive weekly alerts from Experian. So that's the data that we use to trigger these offers. And keep in mind that since we receive this data from all three of the bureaus, you will get leads from all three of the bureaus if you want them. And just because you prefer to work with one bureau over the other two doesn't mean that the lender that your member is talking to has applied with, with an institution that uses the same bureau. So again, this is why it's critically important, in our opinion, that we have the data from all three of the bureaus. But we provide that list of all leads to you each day or each week in the case of Experian, and we will fulfill any direct mail or email offers for you on the same day we identify the lead. So when we receive those 15 members that qualified for your auto offer, when we see that each morning or in the morning, we would have sent out those 15 direct mail letters or those 15 email offers already today. They'd already be out, and your loan officer staff or call center staff would have a list of those 15 people to follow up with, and secure those loans. So again, this slide just basically goes over everything that we just talked about, but again, that's how it works. So we compare the credit bureau activity with your member list, each day or each week in the case of Experian. We identify which members have applied for auto loans, mortgages, or credit cards. We set the criteria to identify only those members that would qualify for one of your loan offers. We can send out direct mail, email, and obviously print the statement, onserts or statement letters for those members, and we provide those outbound call lists, to you. In the case of mortgage loans, obviously you've probably got a 30 to 45 day window to close loans before they go to other lenders. With auto loans, what we found is that over 40% of people, even if they've applied for a loan, do not finance the car on the same day or anything like that. So you have a significant opportunity to still attract the auto loan. And if they have driven away from a dealer lot with a car, chances are you might be able to refinance that offer. And honestly, with auto loans, maybe you leave out those people with credit scores over 700 because right now, they've probably got a 0%. Loan or something like that from the dealer, and you're not going to be able to beat it. But again, we can specify the credit criteria, both minimum and maximum credit scores, to identify that sweet spot, of loans that you'll have the ability to finance. Again, because we can provide this data from all three of the bureaus, you benefit from that incremental lift. One bureau you can see here, kind of, our guesstimate of how many inquiries, each of the bureaus sends us each day. But if we're only looking at one bureau, you're getting, a certain number of credit inquiries. When we look at two bureaus, you're, getting a 42% lift in the number of inquiries that we're referencing against your member list. And when we look at all three bureaus, it's a 72% lift. And again, the number of inquiries is critically important because that's what we're using to identify those leads. Excuse me. We can do the same thing for member acquisition. So when we're talking about non-members, we also have the ability to do credit alerting for non-members. In this case, the same thing happens, only now we're specifying, geographic criteria to target qualified prospects in your different communities. We can look at specific counties, specific towns, specific zip codes, and even a distance radius from each of your locations. So anybody who lives in those geographies that apply for a mortgage loan, an auto loan, or a credit card, we can identify each day and each week. And again, we can take those same prospects, pre-screen them against your credit criteria, and add any demographic criteria if you want to. But we can identify those leads from non-members, pre-screen it against your credit criteria, and we can even scrub it against your member list. So if you didn't want to send offers to members, although I'm not sure why you wouldn't, if a member, if we're looking at just a geographical area, and some of your members have applied for a loan, you can certainly extend an offer to them as well. But we can do this for prospects just like we can do it for existing members. And that is also very, very unique. Again, for those of you with DataFlex, we can use DataFlex, which is our database marketing platform. We can generate reports that show you exactly which of the people who've received these credit-based offers, whether they are the prospecting offers or the credit alerting offers, and we can show you exactly how many of those people have taken you up and opened new loans from the direct mail or the email or the statement-based campaigns they've received. And we can also incorporate any credit-based data that you've purchased into DataFlex. And to give you an idea of what some of these reports look like, we obviously have substantial reports and dashboards inside of DataFlex. For those of you that aren't familiar with it, I'd be happy to go into it in more detail, at another time. But you have the ability to slice and dice the data any way you'd like, and then obviously we can develop reports and show you how to create reports specific to certain campaigns you send out to show you exactly how many loans you've closed for each of those campaigns. So the questions that obviously we receive all the time is, what does this cost? We've heard that using credit data can be very, very expensive. Well, it doesn't cost nearly as much as you think, and it certainly costs a lot less than working with the bureaus directly. When we talk about the credit prospecting campaigns, which are the proactive campaigns, the sample campaigns that I shared with you, pricing depends on a number of different factors. Obviously the number of records you purchase comes into play. So if we're looking at purchasing 1,000 records or 10,000 or 100,000 records, that's going to make a difference in the cost. It also depends on which demographic criteria we're using. A lot of the demographic criteria is free, but sometimes you'll come across a field that costs a penny a record or something like that, or a few cents a record to purchase. And there are credit bureau minimum charges involved with credit prospecting data. I can tell you that our minimums, we've negotiated very, very low minimums with the bureaus. So for any of you that are used to working with the bureaus directly, you probably have minimum charges of $2,000 or $2,500 per campaign. LKCS's minimum is $750 per calendar month. And the nice thing about that is, first of all, it's significantly lower than $2,000 or $2,500 per campaign. But because it's a monthly minimum, we talked throughout the presentation about how you could run multiple campaigns at the same time. Well, because that minimum is a monthly minimum, you can run several small campaigns that all add up for you to fulfill that minimum obligation. And it's a monthly minimum only for months that you actually pull data. So if you run these types of prospecting campaigns quarterly, obviously the months that you're not pulling data, you're not paying anything to the credit bureaus. It's only the months that you actually purchase data. And we can talk about that more, certainly offline, and I can get your cost estimates. But keep in mind with prospecting campaigns that we offer free list counts and free estimates. And again, for those of you working with the bureaus directly, when you request a count from the bureau, you're probably used to waiting a couple of weeks before you get the results back. We can run counts, within certain, minutes or hours, certainly within a day, because we have a web-based interface directly to the credit data that allows us to run those counts. So we can, help you identify exactly how many people would qualify for a specific, promotion or campaign that you're thinking of running within the specific geography that you have or from within your membership, list that meet your credit criteria. And we can do that, at no obligation, no cost, anything like that. So if you're even thinking about running a credit-based campaign, let me know, because we can very easily go in and at least give you an idea of the counts involved and the costs involved and get you an accurate cost estimate. And with credit alerting, this is again comparing your member list to the number to the daily and weekly feeds from the bureaus. That's based on the number of people that we screen each month. So it's based on the number of members that you have. And what we can do there to give you an idea of cost is we can run a free opportunity analysis for you. And what that does is we take your member list, and again, all we need are names and addresses, and we can compare that with the credit data feeds over the past 30 days and identify exactly how many of your members have applied for credit that also meet your credit criteria for those different types of loans, for mortgage loans, auto loans, and credit cards in the past 30 days. And we can show you from there, roughly what we expect as far as the number of leads you would get, and how many of those loans you could close, and how this program pays for itself. To give you an idea of that, here's a slide that I think some of you will find pretty important. What we're doing here is this is showing you a kind of a credit alerting case study. This is not actual data from any of our clients, but we're assuming that in this case that this credit union is going after mortgage loans with an average loan size of $150,000 per loan, and the total front-end and back-end revenue of these loans is going to be somewhere between 2.5% and 3%. I think you'll find that all of these numbers are fairly conservative, but we can adjust up and down based on your specific situation, what internally there. We'll focus on the first column here, on the first row, where we're monitoring 15,000 members each month. And in that case, what we estimate is that the number of members that will both apply for a mortgage in a month and also meet your credit criteria is about 1%. So you would expect that about monitoring 15,000 members, that 150 members a month will apply for a mortgage that also meet your credit criteria. We're going to assume that all we're doing is making outbound phone calls, or you're making outbound phone calls to these members. So 150 members a month, your loan staff is calling, or your call center is calling, and we're going to assume conservatively that you can successfully contact 30% of those members. And then of the 30% that you contact, hopefully you have the ability to at least close 10% of those loans, which again is a very, very conservative number. You should be able to close a higher percentage of that when your loan officers or your call center are actually talking to a member that's actively in the market for a loan and meets your loan criteria. It should be a fairly easy process to close. But so if we assume you can contact 30% and we assume you can close 10% of the 30% that you contact, that means you're going to close 5 loans a month. Based on the front end and back end revenue of 2.5% to 3%, those 5 loans will generate about $20,625 in revenue each month. The list price for credit alerting for 15,000 members per month is $1,400 per month is what the program will cost you. Now, that does not include, any direct mail or email components. That's just for us to provide the lists back to you for your call center staff or your loan staff to make the outbound phone calls. But based on that, you will actually make about $15 for each dollar you spend on the campaign. So I think, and you can see how that scales, with the more and more members that we're looking at. But again, I can run specific opportunity analysis for each of you and actually show you from your member list exactly how many of your members applied for mortgages or auto loans or credit cards in the past 30 days and how many of those meet your credit criteria. I'd be happy to do that for anybody. And since you've listened to me for the last 45 minutes or so, I want to extend a special offer for you, and that is that if you sign up for credit alerting with LKCS by May 15th, we will actually discount those programs by $1,200 per year. So you'll actually save $100 per month. So that's a pretty significant savings just for listening to me. So with that, I will stick around and answer any questions that you have. Please feel free to type them into the toolbar on your screen. And feel free to reach out to me either by phone or email with any questions. We've seen tremendous success with these campaigns for a number of our clients, and I'm sure that we can do the same for you. So thank you very much.